Yo guys, what's up? It is Monday, June 16th. I'm heading out to Utah tomorrow, doing some hiking in Canyonlands and Arches and camping out for a couple of days. But I'll be in touch. So the market was up today. I mean, I just got to say one thing, that we cannot go against these flows. I mean, you got wars going on, you got Powell mouthing off every day about this and that, you got some headline popping up, you got trade situation, tariffs, but I mean, it's all about the flows. I come on here almost every day and I say, like, we're in this environment, which is just an exceptional environment with very, very, very strong flows. When you're talking about 7 trillion plus annual leading spending flows and 1.7, 1.8, maybe 2 trillion net government transfers annually, that's just like a tsunami of monetary conditions that are positive for risk assets. Every single time the market sells off, it is literally handing you on a silver platter the opportunity to take on risk. Some people did it in gold. Gold is not really my thing. I mean, I own stocks. Like, my stock portfolio since the low in early April has rebounded almost 90%, like 87.5%. And my portfolio is up by about, I think it's like 25 or 30%. That's a new high from the prior peak. And that's because I used the downturn, in late March and early April to add stocks as it was going down. The thing that I see is that, we just end up complicating this whole game for ourselves, and we shouldn't be doing that. I mean, it's not about, we shouldn't try to be cute and slick and I'm going to go short and I'm going to do this and I'm going to buy this spread, or I'm going to get these options on, or I'm going to time it right here. I mean, again, I'll just repeat, we're in this environment, which is a very, very, I think it's a unique environment in terms of, if you look at the fiscal situation, if you look at these massive transfers, and until that changes, and I'll be the first one to tell you, and I'll be honest, like, coming into this year, I thought we were going to see a change. I mentioned things. I said the rate cuts by the Fed. I said the slowdown in the cost of living or the reduction in the cost of living increase for Social Security. I talked about the expiration of the Trump tax cuts. Well, that might still happen. Congress has to pass the bill, and I'll talk about that in a minute. But like, the rate cuts didn't happen. We did see, I mean, I was correct in forecasting, like, we're going to first start to see T-bill interest income going down, and it is down. It's down like 31 billion year over year. But overall interest income transfers are up 41 billion because of interest on Treasury securities. As far as Social Security, the cost of living increase was much smaller this year, but the recipient rolls have increased. So leading flows have been extremely strong. Net government transfers have been extremely strong. And I mean, again, that's not an environment where you don't want to be out. You got to be in, and you got to use every single dip. And I know sometimes it's scary. I know, even me, like, going into this weekend, I wasn't sure. And I was thinking, if Israel starts to hit the oil installations of Iran, that's going to spike. That didn't happen. I mean, they did hit the oil installations, but we didn't see a spike. I said yesterday in my video, the first thing I did yesterday when I was able to find a market that was open, the first market I saw was actually Tel Aviv, of all places, that was up. And then when I saw currency markets, they were flat. Nothing happened. It was like a big yawn. So that was the tip-off, I thought, right there. Well, we're going to see some short covering because everybody panicked and sold. But again, you cannot, I just think it is really kind of a futile endeavor to try to go short or to sell the market or to time a pullback. It's much better when you get these market pullbacks to just continue to add good assets. I've used the example of Warren Buffett so many times in my videos. That's a guy, I think he's the 5th richest in the world, owns stocks far and away. If you're talking about a guy whose background is finance or investing, far and away more wealth than the next closest financial guy. I think it's Jeff Yass, who runs Susquehanna Trading. Susquehanna Trading is like a market maker in options, okay? So what they do is they build in spreads for themselves. He's done very, very well. I think he's like 53 billion. Warren Buffett's like 150 billion. And the guy after that is, I always forget this guy's name, but he has Citadel. And, you know, basically he's got a shop. His shop is a legalized front running of orders. So, I mean, we're not in that game. We got to, you know, if we're going to pattern ourselves after anybody, we should pattern ourselves after Warren Buffett. Time makes you rich. I wish I knew these things when I spent a good part of my career. For those of you who know me and know my history, like I was a member, a futures trader, a member of 4 exchanges, where I spent many, many years in the pits, you know, going short everything for some reason. And I've said this many times, that you could do kind of like a weird sociological thesis on why is it that floor trader, well, they don't really exist anymore, but at the time, why is it that we all wanted to go short all the time? And the only guys I ever saw making any money were the guys who were on the buy side, and there were very few of them. But that's typical. It's like lots of people lose little bits of money, and then a very few people make a lot of money. And they usually go against the crowd. The crowd for us, when I was a floor trader, like we were always selling. You don't got to be cute. You don't got to be slick. And if you're young and if you're starting out in this game, I mean, I'm giving you pearls of wisdom here. Like you just want to accumulate assets and hold them, good assets, and you want to hold them. And you want to use the emotion and the panic of other people, of other investors. You want to use that against them when things, you know, when they freak out and they sell. Now, if conditions change, then the strategy has to change. And I said in a prior video that if Congress doesn't raise the debt ceiling, then this whole thing flips to a negative cycle. All right, because then Treasury could only spend what it collects in taxes. Taxes could only be paid by what the Treasury spends. So Treasury, the spending gets cut, economic growth goes down, tax collections go down, spending gets cut some more, economic growth contracts some more, tax collections go down some more. You get into this vicious cycle down. I don't think that's going to happen. I think they're going to end up raising the debt ceiling. I wish they would do away with the stupid thing because it's an anachronism that goes back to the gold standard. But, you know, we go through this now every 2 years. It's crazy. Trump wants to get rid of it. Even Pocahontas, Elizabeth Warren, wants to get rid of it. So, yeah. Once that debt ceiling is raised, you're going to see new highs in the market. I mean, again, monetary conditions are they're just such that that's going to happen. I like these water examples. I'm saying this as the rain is coming down right here in Florida. I like these water examples. You know, I've used the swimming pool example in the past many, many times. I've started to use the bilge pump and the boat. But like, this is a little bit like surfing. Like we got the perfect wave here. You just got to keep riding it. If you've ever watched the movie Endless Summer, a great movie, classic. If you have a chance to watch it, I would highly recommend it. It's about these two young guys from California, two surfers, and they go around the world looking for the perfect wave. It's a documentary, actually. And, you know, they start off in Hawaii, and then they go to Australia, and then they go to Tahiti, then they go to Indonesia, and then they get to South Africa. And they find this beach in South Africa where they actually had a hike to this beach. It was a pretty long hike with their surfboards, and back in those days, you know, they were these big longboards. I actually had one of them. I did a little surfing, you know, when I was younger, when I was in high school. I was a lifeguard, a beach lifeguard. And they found the perfect wave. And they were the only two guys on the beach, in this beach in South Africa, and they paddled out. And these waves, they were not that big, but they were perfectly formed, and they just kept on going almost like forever. And these kids, they paddled out and they were surfing it, and they, you know, they said at one point it almost became boring. They just kept going, like the wave never stopped. And that's kind of like what we're in right now. And I know, like, for some people, it's human nature, like, they might want to say, well, it's too easy. I have to make it, you know, more complex, more complicated. I'm smarter than that. There's more intellect going on here. I have to think of something, you know, do this, do some option spread, or there's something. You don't have to. Sometimes it's ego, and ego will wreck what you're trying to do. You know, I've been doing this for a long time. If I had a guy like me back when I was starting out to learn from, I would have paid it. Well, I shouldn't even say that, because there were guys, maybe not like me in terms of the analytical framework that they use, but very successful traders who I could have used, or I could have went to be mentors to me, but I never did. You want to know why? Because I always thought I was too smart. I'm smarter than those guys. I'll figure it out myself. But that was my ego. That kept me from learning. My ego kept me from learning. And it took me way longer than what would have been the case if I had, you know, allowed those guys to mentor me, or went to them and asked for their help. No, I was too smart for that. I didn't want to do it. I'd go home at night, break out my charts, draw my lines, moving averages. You know, we didn't really have computers. We were doing everything by hand. Fibonacci numbers, moving averages, stochastics, RSI, writing down. It wasn't what it was about, man. Never had a concept of the macro. Never had a concept of the mental game. So, like, avail yourself to this. Don't make it harder than what it is, because it's not. The hard part is the me, the you part, the me part. It's like controlling your emotions, being disciplined, you know, having the right mental game, attitude, framing of how you know, when you go through things, maybe that are uncomfortable. How do you frame it? Do you frame it as a negative, and then that impacts your psyche, it impacts your confidence, or do you frame it as a positive somehow, as a learning experience, as something? All that stuff, very, very important. Anyway, that's it for today. Please like and subscribe. The war's not going to be over quickly, because Israel is going to want to destroy all of Iran's nuclear facilities. They got that one there. It's called like Fudan or Fudar or something like that. And it's like a half a mile underground, and Israel doesn't have the bombs for that. The U.S. does. The U.S. is not committed right now to do anything, but Israel's not going to stop. Iran now is asking for a ceasefire. It's always the same bullshit. You know, you start shit, you get your ass kicked. These guys, you start something, they get their ass kicked, and then they're screaming for a ceasefire so that they could regroup and rearm. Israel's not going to fall for that. So, but they're, you know, they have dominance over the skies. They're just, it's going to continue for a while. So there'll be some volatility. But again, just remember what I said at the beginning. It's all about the flows. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.